Hey there, YouTubers and DeFiers. Welcome back to your favorite bad lighting camera show, DeFi Deluxe. I've got another great news episode for you. There has been so much that has happened in the past last week, so let's jump right into it. First, I just want to do a quick little recap of Synlev, which I talked to you about in my video from last week. Boy, did I call that one correctly. It jumped from a 3 million market cap up to 7 million in the past 7 days. Looks like people really like the ability to natively leverage their ETH. It has gone down a bit since its highs here, so as you know, this is not financial advice. However, I am very interested in this token. Guys, just know that I love researching this stuff, and I am going to do my best to always bring you the best opportunities in the news each week. In fact, when it comes to the order of my news stories, I will always try to put the best opportunities first in the video. So make sure to hit that subscribe button below, hit the bell to be notified, and find the best opportunities. First up, apparently the 30,000% APYs are back. Check out Emporium Finance. This project is interesting because these guys are behind the Crypto Emporium. The Crypto Emporium specializes in selling physical real-world assets, such as cars, motorcycles, watches, property, electronics, all kinds of stuff. And apparently they have a pretty good reputation. They've been an online retailer since 2018, and looking at Trustpilot.com, we can see a bunch of great reviews, though I haven't used the site myself as it appears to only service the European market. The site still appears to be a reputable service. Looking at their Twitter account, you'll see that they've been around since 2012 and have 51,000 followers, which leads me to believe that this project could have some clout. You can check out more information here and on their Medium page for the actual reward incentives, but let me show you what they look like. As of now, the token has not been listed on CoinGecko yet, and it is at $12.95, 2,300% on the ETH DAI pool, 1,200% on the ETH USDC pool. They've even got 2 sushi pools in here and 1 curve pool. So this is a great opportunity. These APYs are not going to last very long, and I doubt that the coin is going to be sitting at the market cap that it is for long. As far as the tokenomics go, there are only 888,000 in the total supply, and they've got 10% of the weekly rewards going to the LP program. So I'm excited for this one, as they already have a successful online retailer business and a strong team behind it, it sounds like. Next up on the list is the mergers. If you haven't heard, Yearn has merged with not only Cover, also Cream Finance, as well as Pickle. So they have merged with all 3 of these projects to, as they say, work together in symbiosis. Their goal is to reduce duplicate work, increase specialization, and leverage shared expertise. Andre Cronje always has something up his sleeve, and it seems like he's always coming up with some new prototype every week. Just 5 days ago, he launched DaraSwap for capital-efficient swaps, futures, options, and loans. If you haven't seen the price of Hedgehog or Cover lately, go look. I think there needs to be a new term for when Andre Cronje creates a new token, similar to the Coinbase effect. I guess we could just go with the Cronje effect, but it seems like so far everything this guy touches is gold. These are the first DeFi mergers we've seen so far, and I guess you could categorize them as controversial, as the reaction from the communities has been mixed. Yearn is becoming a bit of a powerhouse now, and it's bringing some concerns from community members that there will be some challenges in the future, particularly around governance decision-making in general when it comes to these projects. Andre, of course, will tell you that he does not represent Yearn himself, and that he is only one of the many developers working on the project. Nevertheless, in my opinion, it seems as though people are much more prone to follow other people rather than just the protocols themselves. In other news, an update on the CrescoFin SAIDO, which is to launch on Monday, November 30th, with the Wrapped Crez and USDT pool listed on Dodo. The purchased tokens are going to be unlocked and freely tradable once purchased, and there is no KYC to join. Apparently there are only 750,000 Wrapped Crez tokens available, so it'll be interesting to see how this sale goes. In other news, Idle Finance has just released their governance token 2 days ago. If you're not familiar, Idle Finance is a yield aggregator which maximizes your returns across DeFi protocols. I'm not over familiar with the protocol as I just found out about it, but the APYs for stablecoins look pretty good. There's 2 strategies available right now. The best yield strategy allows you to maximize the highest interest rate returns. And then there's the risk adjusted strategy, which has lower APYs but diversifies your risk over a number of protocols. There's not a lot of liquidity in the pool yet. As you can see, there's only $5,545, but it just came out 2 days ago. So I'm sure once the liquidity mining incentives start, we'll get a lot more money flooding into the pool and a lot more tokens printed. Idle is going to have a mix of on-chain and off-chain voting. There will be an ecosystem fund, which is a community-managed treasury to fund various initiatives to improve the protocol. The devs have transferred the admin keys, so all powers are now transferred to Idle holders. The early LP fund, which was previously set at 2%, has been increased to 4% of the total supply of 520,000 Idle. So it looks like all you have to do is deposit your money into one of these pools and you will be able to receive the Idle token. Pretty cool. And for our last piece of news, DeFi Dollar has released an interest-bearing savings account. This is not super new news as this was released on November 18th. However, I wanted to bring it to your attention because if you look at the price, it's still got a 3 million market cap and it is a pretty new idea. This stablecoin is a bit different. If you read their Medium posts, you see that they had concerns over centralized stablecoins trading above or below the peg, which makes sense. I mean, they're centralized, right? Why should they even be at all above or below the peg? But they are, as well as DAI. The DeFi Dollar is an attempt at being an index of stablecoins that uses primitives to stay near the dollar mark and subsidize the collateralization ratio. You can see more on their Medium post about what exactly goes on underneath the hood. I'm also bullish on this project, not only because it has been audited, but also because it is similar to MUSD in that it's an easy way to have a savings account with a super high APY. I believe as more people find out about these high yield savings accounts, which use stable coins so your money doesn't have to fluctuate, they're going to want in. Up until now, the only barrier or missing piece has been insurance. People aren't going to put large amounts of capital into these savings accounts without insurance, right? But now that we have decentralized insurance like Cover as well as Umbrella, we can actually do that. We're going to have more capital flow over from traditional finance and more institutional investors are going to want to get involved. Just make sure to know that this is a variable savings rate. This is not fixed. It goes up and down all the time. And there is a 0.5% exit fee whenever you withdraw, which goes back into the pool. Well, that'll do it for this week's news. Please subscribe below, and remember, this is not financial advice. I'm not advising you to get into any of these pools. In fact, you only want to use funds that you are willing to lose, as this is experimental technology and should be treated as such.